Hello everyone and welcome back to another video. In today's video, we want to be discussing something very important to all traders and investors out there, and that is whether history is on the side currently of the bulls or the bears. So the S&P 500, the world's biggest market, has been rising incredibly quickly. As we know, it also hasn't taken a dive of 5% or more in a long time. In fact, it's almost been 200 sessions. This is statistically unlikely and actually has occurred very few times. So we'll be talking about that and our technical levels for what is to come in the markets right now. This one's going to be good, guys. Stay tuned. Okay, well, one of the best places that we can start when we're doing our market recap for the market close 19th of August 2021 is right here, and that is the heat map of the S&P 500. There were actually some nice breakouts in certain trades yesterday. Netflix was something we bought up on our live trades a few days ago, and it actually broke through that resistance, and that was a really great trade during the session. However, it was a bit of a lackluster day across the board. Some were up, some were down, and when we really go back over and have a look at the market indices, you'll see what happened. The market recovered through the day. It recovered very quickly. There was some good TA trading here for the dip, but this doesn't mean that the bears have lost control. You'll notice a little bit of selling near the close, and on top of that, you'll also notice where the rejection point was, the 20 exponential moving average. We'll be talking about that quite a lot through today's video. Very important level for us to watch for who really wins and who loses. Which sectors were doing well? Well, technology actually came back very strong. XLP was there as well, consumer staples, XLV, healthcare, and utilities. When you see those three up near the top, they're defensive sectors, so it's important to understand that if they're doing well in the recovery, that's not necessarily Wall Street also saying, oh, hey, we're really excited to be in this market, we're buying the dip, we're really, really happy about it, because they're defensive sectors. Remember, XLK is certainly not, but XLP, XLV, and XLU are all defensive. They're the ones that Wall Street tends to park money into when things are getting a little crazy. I also want to just talk about the big flow yesterday. So I'm going to start bringing this into the daily recaps, and that is the total premiums, calls versus puts. Where was the big money at? The biggest money coming into the calls was Nvidia, the SPY, so the S&P 500, Tesla continued to be incredibly strong, and Amazon was picked up heavily in the call options. On the negative side, you had the SPY also showing a huge amount of put options, and then we have the Russell 2000. The small cap companies came under severe pressure from the put side. Barber also getting flogged. Tesla, you can see here the contrast between the bulls and the bears. No one really knows what they want to do. Negative and positive sides both there. Probably the positives more retail and the negatives more, of course, Wall Street here. And then it goes on and on. You can see really, though, big contrast between the bulls and the bears on several stocks, and these were the ones that were most heavily traded. So I alluded to the fact that it's unusual for the S&P 500 to actually not have a small correction after a certain period of time. And this is part of the reason why I was starting to feel, and I've been talking about this now for 3 to 4 weeks on the channel, that we were going to go into a neutralized return or a slight decline. And one of those reasons why it's actually pretty rare for us to see the S&P 500 have a big streak without a 5% decline point. In fact, it hasn't happened many times. Look at all the times it's happened in history. Very, very rare, and at weird points as well. It wasn't out of the global financial crisis. We obviously didn't see it happen after the 2009 kind of rally into 2010-11. We did see corrections over that period, yet we've only had this happen a handful of times. 1, 2, 3, 4, 5, 6, 7 times. They've gone much longer. You can see here the one that happened in 2015 went just to 210. We're getting on 200. But again, statistically rare throughout time. Another thing that's pretty interesting is when we look at the year-to-date results for the markets. And when you think about it, the S&P 500's already done amazingly. So has the Nasdaq and so has the Dow. But did you know that the Nasdaq is actually the worst returner for the year? You wouldn't think that. A lot of people wouldn't think that. The S&P 500 has actually almost returned 17.5% since the year to date. Another amazing return. It's very rare that the S&P 500 really books 20% years or 22% plus years. It usually tends to be in the single digits or, of course, these teens. Sometimes it does 20s, but it's not a common occurrence. Again, out of a pandemic, out of a crash, I understand with the market being backed by the Fed, that's going to juice it a little bit more, but it's been pretty steadily increasing. Look at this. The S&P, really no weakness there. And again, when you're going into certain months, such as September, such as a historically low period of the year, you've got to start paying attention to these things. We also know the Nasdaq over 20 years, again, is flat to down over the August-September period. Once you start to bring these stats together, it becomes really important to bring your technical analysis levels and your fundamental analysis levels again together with the actual market. See what the price action's doing. Do you want to just turn a bear because all those stats sound like it's bearish? No, that would be stupid. If you turn bearish straight away, you're going to lose because we know that it pays to be an optimist in the markets. But there are some key things that I'll be looking at through the Friday session here, and I think this is going to be a very, very interesting Friday session. So firstly, the Volatility Index. Let's get stuck into the TA. We move here above 20. Now, of course, yesterday through the session, or of course the 19th of August for most people, I'm in Australia, so it's yesterday for me here, we have the movement down through the day. Of course, when a market goes up, volatility tends to come down. They don't call the VIX the fear index for nothing. But in the stream last night before the market opened, I talked about how important it was to see this weekly close above this 22 zone. I'm really looking for that to occur because if that occurs, it really shows us as traders and investors that the bears are here and they're really fierce and they're ready to go. Look how many times the VIX spikes and it's just a very quick little flash in the pan kind of fear. Very rarely does the VIX actually get above 22 and close on the weekly. Even recently, when the VIX has spiked, it has not been able to maintain this volatility, and that's why we haven't had that bigger pullback. So we're looking for this thing above 22, and I think that that's going to be a very cool TA level for us to be checking out through the markets. There are other reasons why we also can paint the picture that things are turning a little bit more bearish, even though we had a recovery there, or what looks like a recovery during the last session. We'll go through how to spot those types of things because it was a very interesting zone through the session in the morning. We have a long leg doji here on the dollar index. Now, we know that if dollar index tends to go up, it could mean risk off in the markets. People go to safe havens such as bonds, such as dollar index, and they tend to get out of the stock market. It's one of those big time things. We have the long leg doji. We have the pull where the moves above that level yesterday, and of course it's closed above that level. This dollar index is fully in force now. Look at this huge bullish action that's come in here, and really Forex trading's been where it's at this week. Massive moves, better than even the markets, and yeah, very phenomenal stuff. So this is putting in play now the double bottom on the dollar index. Look at this, look at the weekly. We've got the double bottom, we've got that great consolidation structure before the breakout, and now we've seen the breakout. Again, pointing to that idea of risk off in the markets, though it's not as well correlated as it used to be. Either or, dollar index looks really, really great. Now, this should put pressure on gold, you would think, and gold's starting to struggle around this zone. You can see you've got long leg doji, no decision made, closure below. We haven't had that quite yet, and you really got to dial in onto the smaller time frames to understand what's going on here. So every single time this 2 hour is getting down, like eventually there was support here, and then it kind of stuffed around with this level with very minimal closes underneath. They're just not enough yet. We want to see a nice, dirty, big close underneath this level. If you get a candle like this, you would think that gold, especially under these wicks here, gold should be falling through, and it should go back down a little bit, down into that 1750, 1760 range. Is it going to be significant? Probably not, but that's what you're looking for from the bear side. From the bull side, you're just looking for it to clean these levels, get just below 1800, close above, and then continue to go bullish, and this is just consolidation in that move. So we're at the neutralized area for gold. It's going to be important to watch this and see what it does. But you can see here that it's all about the closure, not necessarily what you think. It's the price action that's going to tell you the way. On the other side, we had US oil yesterday. I brought that back into the rotation. Why did we bring it back into the rotation, guys? It closed underneath. I mean, wow, it doesn't get much better than this. We have support, closure underneath. That led to a nice day trade there for the short side. And I think it really points to 62 being the next level of support for US oil, or potentially even at the 60 zone with a spike into that, because we're getting close to this daily 200 again. Whenever we see these types of materials, so things like oil, things like copper as well, let's just bring up copper here for everybody, start to fall through, it shows that the economic health may not be as good as we believe, and again, a correction could be coming. Here on copper, if you really think about it, this is a significant drop off here. We've gone through so many levels recently. Look at this massive trend line that's been in place now all the way since the March lows. That has closed below recently. It's gotten through the support here of 4.11. And if copper does rally here a little bit, this could be a point where it roll reversals and starts to short off. So again, if copper's going down, you expect the market to take a dive as well sometime soon. It's one of those correlations that is relatively strong. Let's move over now to Tesla. Let's talk about some of these stock market actual stocks and indices. And we'll go over here to Tesla first. This chart has no idea what it wants to do. And I think there's a good reason why it has no idea what it wants to do. It held the support. It held that trend line. Congratulations, anyone that picked it up through these levels here, picked it up all the way through these previous buy zones. That was not bad. It obviously got very close to the 695 zone, 700 zone. There was a reason, again, it should be stopped around that zone because previous resistance, previous support, and also a huge amount of calls. So I thought I'd get the data here just to show you how many calls. This is the net calls versus puts, by the way. So there are a absolute ridiculous ton of calls sitting on Tesla for expiry on the Friday session. And this is why I think Tesla, it is really weird. It's going to be a very, very strange point. We actually have 2.7 million net positive calls at 650. You've obviously got generally net positive calls, but then you've got net negative puts at 680. So it's kind of convoluted, and this is why the chart may be difficult to trade through the Friday session. I mean, if I was having a guess, I would think down for Tesla through the Friday session and weakness to ensue. But that's only because I believe most of the puts are probably Wall Street, and a lot of those calls that we saw come in through the previous sessions were probably retail. So that's why I think there's a fight between these bulls and the bears here in Tesla. But this is a weird flow map, and very, very interesting to see. That shows you no definitive direction here in the charts, at least from the raw data of the options expiring. We'll continue to revisit this if you guys enjoy it. Let me know in the comments down below if you want us to revisit flow maps like that, and of course the big movers in the call and put options thing. I want to bring that in. I want to start discussing it on the analysis charts. I think it's really important. Let's move over to the indices here. Wow, it did exactly what we thought it would do. The fake market futures, however, got down to the 50 really quickly. So actually, if you were trading the real market, you never got a chance to take the profit off of the 50. We talked about once you close below the 20, it goes to the 50. It did so on the fake market futures, obviously the futures trading. Then it bounced, and I actually expected it to have a little double bottom here or maybe come back down through the day. And I always expect a market to come back up and generally test the 20 moving average. And if we notice here, once we zoom in, that's exactly what the QQQ did and the other markets. They all tested that 20 and they all sold off against that 20 into the close. They did start to sell off. And at the time of this recording, the markets are down another 0.1, 0.2%, not that much. But that is what happened there. You can see the sell-off that occurred. This is the live market and the fake market futures right now. You can see that trend line that's been going down here on the 5-minute. And I want to talk about this chart down here because we were actually covering this through the session. And I want to talk about it because this pretty much was, the go town for buyers yesterday. So we have the trough, we have the peak, we have the higher trough. This is obviously a lightning bolt. This is what we always talk about. Now, there are ways and means. I was looking for a closure above this zone here. You kind of get right on it, and then you'll notice even the market didn't know what it wanted to do in the next 15 minutes, long leg doji. Then you get confirmation breakout. So this is definitely a trigger, and for some people, this will be an initial scale in. So they may have scaled in here, had a stop underneath there, and then taken the rest of it off in here. It did lead to some pretty good gains. So you can see here the market continued to rally through that session, and that's a classic lightning bolt occurring around a support. We've got to remember at this level here, the 50 exponential moving average on the daily was being hit. So we can see right there, it was right on it just before the market opened. So right around here, the 50 EMA was hit. it did have that lightning bolt, and that caused that rally through the day. It's just a good example of how we use the lightning bolt in real process. You can go watch last night's stream. I was definitely talking about it in the morning session. So let's have a look here at the S&P 500. S&P 500 also closed below the 20, bounced down below the 20 exponential here. You can notice it found that level, found it as resistance, and sold off a little bit. I'd like to see the SPX, the S&P 500, come back down to the 50 and at least test that level out again. In almost every one of the other pullbacks to the 50, it's actually touched it during the real market. So you'll see here, there's only one time it barely didn't. This one's the furthest away it's ever been. So I would like to see this thing come back down, touch the 50, and a close underneath the 50, guys. Ooh, if you're a bear in the market, that's going to be very interesting. That is going to be the zone that most people are looking at. I think TA will show that at this level, if you close underneath here and effectively your most recent trend line will be getting broken at the same point, this allows the bears to take full control of the market. And of course, start to play the technical game, start to play the seasonal game, being September weakness, and there's the general stat of the market likes to pull back at least 5% over a period of time. Remember, 2 steps forward, 1 step back, very normal in the market. Unhealthy market doesn't pull back a decent percentage. So will buy the dip work here again on the 50? Will it come back down through the session? You'll have to look at the smaller time frames. But yes, if I was having a guess, that would be the zone that I would be thinking it's coming back down to. And this will be where the true, real fight between the bulls and the bears taking control of the market will be had. What do you guys think as well? I'd be interested to hear it. Let's move over to Bitcoin. Bitcoin had a much better session. If we think about the movement here, I really like the movement coming through on Bitcoin. It actually hit the first take profit immediately. So you get quite a few different opportunities here. You've got the smaller time frame movement here where you've got trough, peak, higher trough, higher peak. It closes above. You take it in to either the 46K zone or you take it to that 47. Then you've got the other one where you're breaking through. You're showing consolidation here and you're breaking through. Unfortunately, that was such a huge rally that you weren't able to wait for the close here. It just rallied pretty much straight into the resistance. But nice movement on Bitcoin, on the cryptos. If you go over to the daily as well, you'll notice it just about hit our daily 20, which is about the right level you want it to, and it's rejected all of those other levels. So very, very nice, rejected those levels. Even the trend line on the way down, if we think about this one, which is another thing we brought up in the live stream last night, look at this. Series of lower peaks, closure above, little bit of bullish movement. It's one of the classic things that I like to take. Very, very nice trades. So yeah, Bitcoin's looking better again. It's putting pressure back on the top. 48K, of course, being the key resistance here that you close above. You get above that, you'd have to think it's going towards 50, wouldn't you? The same with Ethereum. That will also run at the same point. Thanks so much, guys, for watching the video. If you did enjoy it, I know it's been a bit of a long one, please remember to subscribe, hit that like button, and if you enjoy some of the new content as well, always post that in the comments. It helps me understand what you guys want to see and what you benefit from. See you all 1 hour before the New York Open this Friday. Wow, it's going to be fun. Catch everyone.